In this channel, we have talked about a lot of strategies and indicators, but one thing that people always want to learn more about is intraday option trading strategies. And after multiple questions, here we are with a video on just that. A trading strategy, if you know the basics of options, it should be very easy to understand, very easy to question, which is also very important. And you can start by backtesting and even figuring out the results yourself. After doing all of this, you can decide yourself whether you want to trade this strategy or not. If you don't know me yet, my name is Ajay Ajith, and in this channel we talk about practical finance and stock market content that everyone should know about. So if you're not subscribed already, get subscribed. Let's get started. So in order to understand the strategy, you need to be a beginner in options trading and trading in general. So we are going to need two concepts for you to understand or question the strategy. That's how I'd like to put it. And the first concept is change in open interest or change in OI. So if you don't know what OI is, please make sure you understand that really well before you get into this video. And the second concept is a very easy technical indicator, which I'll link the video to here, which is called as VWAP. So with these two simple concepts, I'm sure most of us in this community would be knowing about it already. We can get started with the strategy right here. Since this is an option-based strategy, it would be very useful if you find out very liquid option contracts, that too in very liquid indices, right? I've tried this out, or mostly we have seen this strategy working best in indices. I've not tried it in stock options. So let's open the Nifty chart here, or the Nifty option chain here. You can find it in the NSE website. And the first thing that you have to do is you have to come here only at 10:30. The first 1 hour and 15 minutes of a trading day, you can just sit simply and you can watch the market and try to understand a trend. So you come here at 10:30 and you try to understand which is at the money strike for Nifty. Since Nifty is now trading at 24,560, you can easily assume that the nearest strike, which is 24,550, is the at the money strike. Now you have to count the change in OI of the next 6 strikes on the call side and the next 6 strikes on the put side, right? Both will be out of the money strikes here. So the first thing that you have to do is understand that the left side is the call side, the right side is the put side, and you can find out the current at the money strike, which is 24,550, and you have to count whatever is going away from 24,550 on the call side, whichever is in the white, right? You can see that as a cheat code, right? So here you have to count the change in OI of the next 6 strikes on the white side of the call side. So here you have to count the change in OI of the next 6 strikes, again, the ones that you see on the white here. So 69,283, 47,896, 92,000, 51,000, 69,000 and 26,000. You have to take a simple sum here and you can just store that in an Excel sheet, right? Similarly, you have to go to the put side and you have to count 6 strikes away from the at the money strike there as well. So here at the money is 24,550 put. Let's ignore this one and you have to start counting from 24,500 and count every single change in OI after that for 6 strikes. So here when you take the sum of change in OI on the call side, you can see it is much higher than the sum of change in OI on the put side. So this means that call sellers are much more active in the market today. So when call sellers are more active, it would mean that market has a more tendency to be bearish. And when the put sellers are more active, you have to understand that the market would have a higher tendency to be bullish for that day. So why does this happen? We know that mostly option sellers drive the market, and wherever you observe a higher change in OI or higher OI buildup, that is where the option sellers are more active. So now what did we understand? We came here at 10:30 a.m. We found out which side, either the call side or the put side, which has higher change in OI. And we tried to understand, or we are understanding a sense of direction from this, right? So I believe that for an entire strategy to work, you need 3 things mostly. You need a direction, a trend, you need a entry point, and then you need an exit point, right? So mostly you have got a sense of direction by 10:30. If you want to be more sure, you can keep watching the space at 9:30, 9:45, 10 and 10:15 to understand how the call sellers and put sellers are behaving in that first 1 hour and 15 minutes. So in order to put this concept a bit more into practice, we'll go through a tool called as Nifty Trader. Again, this is not a paid promotion. In fact, in this channel, we don't do any paid promotion at all. So like the video if you like that concept, right? So I've come to this Nifty Trader window here. Again, the option chain, the OI chart, most features are free, but for the sake of the video, we'll go into the OI time flow. It's a paid feature. Do not worry about it. But you can see that at 9:30 a.m. how did the option chain look? So at 9:30 a.m. today, you can understand that the change in OI at the call side was much more higher than the change in OI on the put side. This is 9:30 a.m. for Nifty. You can come here after 30 minutes at 10 a.m. and you can understand that still remains the case, right? At the money is now 24,700 because the market moved down slightly in that time frame. But you can see there is heavy call OI buildup, 42,000 contracts here, 37,000 here, and the change in OI in the put side is very, very less here. So again, we move ahead another 30 minutes to 10:30 here. You can see that July 19th. 10:30. So you can see that consistently there is much more call sellers in the market today, right? Change in OI is nothing but how many calls, contracts or put contracts got added in the day today. So you can see that there are much more call sellers active in the market. So you got your sense of direction. So now you understood the trend in Nifty at 10:30 a.m. Now you have to come back into the chart and you have to open up Nifty futures chart. Whichever index you're trying to trade in, let it be Nifty, Bank Nifty, Fin Nifty, you have to make sure that you're observing the futures chart. Again, I would suggest that you try this in Nifty or Bank Nifty first before moving to any other indices or even stock options. So I'm opening up the Nifty futures chart here and you can see that this is the chart for the day, right? And what would we do? We would come here and we want to add the VWAP indicator. So you can go to the indicators tab here and you can search VWAP, right? And volume weighted average price, that is the indicator that will come up. You can add that into the chart here. So you'll be seeing a wide band and green lines and whatnot, right? So let's go ahead and turn all of that off. So click on the settings button right here in VWAP and you can select or deselect all the unnecessary things here, right? We just need the VWAP style here. So here we see a simple line. What is this? This is the average price for the day by giving a weightage to the volume, right? So if you're looking at the entire day in the Nifty futures chart, you can understand that the most number of trades, right, with regards to the volume of trades going in happened at this average line here. So that's what VWAP means. A normal moving average would only consider the price, but a VWAP line would consider price along with the volumes. That is the gist of it, right? So first you have to come here and you have to understand at which all points that we looked at in the option chain, how the market was behaving. So we know we are coming here to trade at 9:30 or we are opening up this chart at 9:30 after deciding the trend. So you can see that the market is very near to its VWAP line. So as I talked about earlier, you got a sense of direction. Now you need an entry point. And that is where VWAP comes into play. VWAP will help us make good entries and make sure that our exit points or our stop losses are very, very nearby. So I want you to understand, if you got the trend from the change in OI as bearish and you understood that price is below the VWAP line, you got double confirmation and you can think about entering a short trade here. On the other side, if you got both change in OI as a bullish trend as well as you got that price currently is above VWAP, you can think about taking a bullish trade there. And in the rare case that this data is giving a mixed signals, most probably it will not, you can go ahead and avoid the trade. There will be no trade for today at 10:30 a.m. So here we understood that the market is most likely going to be bearish and the VWAP will help us with an entry here. So if the Nifty future is trading between 15 to 20 points from the VWAP line, you can go ahead and think about taking a trade there. So let's say if at this time Nifty was trading here, right? Would I go ahead and take a trade? I would not, because the entry is too far from the VWAP point. The market has already given a big move and there is very good chance that the market might retrace, or even otherwise, if I take a trade here, I would want to keep my stop loss above the VWAP line. So my stop loss will be too much in that case. So here at least I'll remove all the other lines here. So here at least the market is trading very much near the VWAP and we got a confirmation and you can think about entering a trade here. So here when I say that entering a trade, it can either be an option buying trade. So market is bearish, you can think about buying an option. Of course, there will be a lot more things to consider here. You can think about selling a call option or you can think about shorting Nifty futures here. So I would prefer this strategy to be an option selling strategy unless and otherwise price action also gives me a confirmation. So for very quick reference, I would be in an option selling trade at the 10:30 time, and let's say this is the horizontal line you can plot with the previous all-time high in Nifty. somewhere around 24,685. When you see that the market has given a breakdown, it has retested and it's moving down again, then you can think about an option buying trade. But otherwise, I would suggest that this would mostly be an option selling strategy. You can catch the time decay or the theta effect in an option selling trade as well. It would also help with the stop loss rules, which says that if the market crosses a VWAP line, you should think about going and exiting that trade. And what is the benefit here? If the market is consolidating, your VWAP will remain along the same lines there. But if the market is falling down, as we expect here, the VWAP will continue moving down, as you can see, and you can think about rolling down your stop loss as well. So from here, let's say at 12:20, the market actually did move up and cross the VWAP. I can choose it as a trailing stop loss and I can think about exiting my trades. So the exit is not based on the premium here. It is based on the spot movement in the Nifty or Bank Nifty futures chart. So what did you learn here? A simple intraday option trading strategy, which I would personally prefer it to be an option selling strategy. I would ask you to observe the option premiums, try out the strategy, maybe even do paper trading before you go ahead and finalize it. It is mostly very easy to understand because the sense of direction is confirmed at 10:30 am. You don't have to rush into a trade, and only if the market is between very near to the VWAP, you can think about entering into a trade with a very small stop loss above or below the VWAP. Yes, there will be days when you hit your stop loss as well, but since this is mostly an intraday strategy and VWAP follows the trend, you'll be getting a lot of chance to ride your trades as well, where maybe you'll be selling an option at 10:30 am and you'll be covering it only at 3:15 or 3:20 pm. And make sure you follow all the risk management techniques that we have discussed about. If you don't know how to do that, you can check it out in this video right here. So I've made a simple calculator where you can test out your money management skills. Of your total capital, no matter what, not more than 1% should be risked in any trade. So make sure you have that in the back of your head as well. So yes, hope you understood the concept and you understood the strategy really well. I would say go ahead, hit the like button if you did, and leave a comment down below if you have any doubts about the subject. This is Ajay Ajith signing off. See you all again in another practical finance and stock market video. See you. Bye bye.